Today, we have brought together players within our sector. We have representatives from the private sector, we have regulators, policymakers, we have representatives from microfinance institutions, from SACCOs, and even researchers, because we want to have a comprehensive discussion. I want to welcome Mr. Gatera Damie, Chairman of AMIR's Board of Directors and the Managing Director of RIM, to come and deliver his opening remarks. Let's welcome him to the podium.
Mr. the representative of Minecofin here, the representative of National Bank of Rwanda, leaders from development partners here present, CEOs and MFI and SACCOs present, distinguished guests, esteemed stakeholders, ladies and gentlemen. Together, we will design strategies to overcome these challenges and opportunities for growth and enhancement with the sector.
As CEO of Microfinance Institutions and SACCOs present, distinguished guests, ladies and gentlemen, good morning. I'm honored to be here with you today and to report this important stakeholders engaged in dialogue. We would like to express my sincere appreciation to the leadership. I call upon everyone here present to enhance our collaboration efforts in defining and implementing programs that focus on emergent issues such as digitization and new technology, green finance and climate resilience, agriculture, finance, and micro-insurance. Furthermore, I would wish also to note that long-term saving mobilization, behavior change, and investing in infrastructure for better services delivery will lead to attain sector growth and national development goals where everyone needs to play a critical role. Distinguished guests, ladies and gentlemen, as I end of my remarks, on behalf of the Minister of Finance, our shared goal and efforts to accelerate financial inclusion with purpose to sustain financial sector in Rwanda. I wish you a fruitful deliberation and thank you for your kind attention and God bless you.
Financial literacy and education is very key. Knowledge and skills in working and doing is very key. It's very key. Inclusive financial products tailored to the needs of the MSMEs and SMEs and the other businesses is very interesting. Because you have to serve the purpose, look at the needs exactly, tailored or demand-driven is very important. Digital financial inclusion, it's speeding up the process. It's very rapid, serving the purpose. It's bridging the gaps that were already identified, but still needs to be smooth, to seeing how it responds to the needs, reduces the crimes within, and then see how it serves the purpose. Affordable credit and risk mitigation. This calls for mitigation, the guarantee, de-risking, the guaranteeing, of course, the knowledge, the collateral, the groups, and the like is very, would serve the purpose. Gender, disability, inclusive finance, yes. This is another segment that is really needed to look into. What do they need specifically from what others need? This triggers for advocacy actions. Interest rate reduction in MFIs and SACCOs. This one I talked about. If the wish in different literature reports, they want to have a single-digit interest rate. I don't know, but with the presence of the actors and the regulatory and policymakers, maybe this can be achieved. strengthen microfinance institutions' capacities. Capacity building starts and ends. So all through the life of a microfinance institution should have the capacities of the members, of the leaders, of the staff, the employees, and everybody. Then advocacy for addressing cybercrime risks, cybersecurity risks is also, because you can see it's really growing rapidly and it is needed. So it has to be dealt with and looked into by all the actors. I'm concluding. Of course, we are seeing in many aspects that financial inclusion, access, is not a privilege, but a necessity for economic progress and social empowerment. Actually, it is a human right. So by ensuring that everyone, regardless of income level, group, or geographic location, has access to financial services, societies can promote sustainable development, reduce inequality, and create resilient economies. Rwanda, in particular, has experienced the power of digital financial solutions and policy-driven initiatives in bridging the financial access and inclusion gap. As I told you, we have seen how far we have gone, and we are seeing where we are, then we know where to go. By implementing targeted interventions, strengthening partnerships, and leveraging digital solutions, financial inclusion can be significantly improved up to the maximum. That's 100% in sustainability and in inclusion. The insights from this review call for stakeholders to jointly implement the highlighted recommendations with the aim of enhancing financial access for all. We can see that everybody is active at a policy level, at a regulatory body level, at a service provision, and of course the operation, the MFIs and the institutions that are operating this. With this joint effort, it is believed that the maximum can be achieved. Thank you so much.
Thank you so much, Mr. Vincent. Let's give him another round of applause. He has indeed shared a lot of insights in this presentation, and it sets the right pace for the next part of the program, which is having a panel discussion. We will be diving deeper into some of the insights that he has shared with us. A reminder, if you have any question or if you have any comment from what he has shared with us, any contribution, do note it down, because right after the panel discussion, we'll open the floor. I can see your hand. I can see we already have contributions and people who are ready to share with us. We'll open the floor right after the panel discussion, and we encourage all of you to please be ready, be willing to share, because we want to have an open dialogue and find really the right solutions to this. Now, I'm excited. I'm going to be introducing our panelists for the next part of the program. They're going to really draw the picture of the current landscape. We'll dive deeper into some of the challenges that were mentioned, but we'll also focus on innovative solutions and what the future holds. The first person, I'm going to start with welcoming Mr. Vincent Munyeshaka, the CEO of BDF. Let's welcome him with a warm round of applause. You're welcome, sir. Up next, we have Mr. Iyachu Jean Bosco, CEO of Access to Finance Rwanda. A warm round of applause as he comes. We have Mr. Isaac Rugamba, Manager, Resource Mobilization and FI Relations, BRD. And we also have Mr. Jackson Kwichiriza, Executive Director, AMIR. Let's also welcome him with a warm round of applause. Mr. Yachu, I think I'll start with you. I'll put you on the spot. From the presentation that has been shared, you're the CEO of Access to Finance Rwanda. You've done numerous research. You know the landscape. Just what is your take on this? Also, just give us a picture when we're talking about access to finance. Where are we? What strides have been made?
Thank you very much, Fiona, for having me. Yes, thank you for having me. really to talk about this very important topic. I must say that the previous presenter, I think, has given all the information, summarized in a good way, really comparing where we started back in 2008 and now. And I must say that, yes, we have great achievements that we should be proud of as a sector. The contribution of the microfinance sector is clear, especially reaching out to the low-income people that not all the conventional kind of players go to, so which is great. So, but having 96% financial inclusion, which is combining both formal and informal, and then 92% combining for the formal sector, is great, but when you dig deeper into the numbers, you'll find that actually majority are using payments or transfers. So when you go to savings, you go to credit, you go to insurance, you go to investment, pension, which is increasing due to Ejoheza, you find that we still have low numbers. And those numbers will tell you that, I mean, when you look at effective financial inclusion, that triggers better livelihood and better incomes, you need to use credit, not just, I mean, it's until you use credit, it's until you use savings and investment that actually start triggering changes within your livelihood. Now, why do we have that? I'll say that, you know, a lot has been done. And when I still see collateral, access to, I mean, collateral as an issue, and I know Vincent is doing a great job there, then I wonder what is missing, because that's the solution he's bringing. So there's an issue that we are not really tackling, because some of the times I talk to the CEOs of MFIs and commercial banks, and I tell them, I ask them a direct question and say, what haven't we done that you want us to do to support you? Do you want capacity? We have really spent a lot building your capacity. Do you need systems? We have invested a lot creating those systems. Do you need the liquidity? BRD is giving the liquidity. Do you need what? Is it an issue of sharing the risk? BDF and us and others are sharing the risk. Up to, actually some of them are going up to 95% guarantee schemes. Then I asked the banks, the MFIs, why aren't you lending? Can you blame us? And well, I haven't received a very good answer to that question. Thank you.
I want to bring in Mr. Vincent. How has the uptake been? I mean, even you can attempt answering his question. What more do you think will be done? From your experience, where are the gaps?
Yeah, thank you very much for giving me the floor. Let me start by actually giving a vote of thanks to AMIR for having organized this kind of stakeholders engagement workshop to discuss a very hot issue, access to finance for all. Allow me also to recognize the role of microfinance institutions, specifically in mobilizing savings countrywide. Although I must recognize that saving levels at national level, the saving level is still very low at 14.5% of our national GDP. And actually our target in the National Strategy for Transformation, the one we're running from now to 2029, we need to increase it at around 26%, 25.9%. So, but the microfinance institutions are actually playing a critical role in resource in saving mobilization. By also, they are playing a good role in terms of boosting formal inclusion. So, as a country, we have done a lot in terms of setting up the whole ecosystem, including formal banks, microfinance institution, insurance sector, capital market, specific institution like BRD, and then BDF to deal with issues around collateral requirement. And yes, I might say, even in terms of financial inclusion, the results we are seeing right now, I think we need to put a caveat. This is in terms of proximity services, responding to simple question whether everybody is having a bank account, if you are having access to mobile money, if you are, and when you come up with a deeper analysis to see usage of financial products in terms of actually using credit, but also even access to credit guarantee, the financial inclusion goes below. Simply because if you ask someone for the last 12 years, have you have access to loan? Majority of the answers will be no. So what is not working right now? So we have numerous of gaps depending on each and every component. Let me start with issues around financial education. We have a clear financial education strategy under the National Bank of Rwanda. We have many players, local NGOs, international NGOs, BDF, incubation centers. What is lacking actually is to create synergies among us. Everybody is trying to work in a kind of survival mode. For instance, as BDF CEO, if I have a target, for instance, to serve like 5,000 MSMEs, I come up with my own capacity building, including a capacity building program, and then my target is the 5,000. I put it in my budget, my people. But if we can come up with a joint capacity building plan to cover the whole micro, small, medium-sized businesses, we can create much and more impact. And when it comes to NGOs, actually, some of them stops at creating awareness, and yet capacity building is not an end result in itself. You build capacity for access to finance. And when there is access to finance, you also need to deal issues of access to market. So that's why right now, we in BDF, in partnership with the BNR, the Central Bank of Rwanda, the Monetary Authority of Singapore, and a private sector, private company from Singapore, we managed to come up with one single program, what we call Rwanda Imbaraga Ecosystem Framework here in Rwanda, where our plan is actually to come together to tackle 3 issues. Issue number 1, component number 1, is actually capacity building to get investor-ready MSME, and we partner with partner financial institutions and other players to focus on every specific group of people like youth, women, but also MSMEs to make sure that we take them through a range of capacity building activities And then component number 2, access to finance. We go in together with partner financial institution, and BDF, we do provide credit guarantee. And after that, also there is another component on access to market, and everything is digital. Digital capacity building, digital access to finance, and also even access to market. We have a platform where if you are, for instance, if a borrower is applying for a loan in a specific bank, the product the borrower is selling is put on that portal, such that everybody in Africa, in Asia can be aware of the product you are selling. So what is not working is, can we work together, have a common delivery program on capacity building, a common delivery program on access to finance, and then tackle issues around access to market together to create much impact. So another issues on financial product. I feel we need to revive a forum where borrowers represented by MSMEs can come together with financial institution, banks, microfinance institution, BDF, a forum actually to discuss the financing needs, the offerings in the partner financial institution, and most of the time what I have seen, any particular bank will try to come up with a financial product without consulting the borrowers. So there is no way you can come up with a customized product without talking to the client. So actually this discussion is very open. I don't know where I can end, but I think I can give the floor to others. But there are many remaining issues where we can improve. We have everything together, everything in terms of framework, we have everything, but we need to work more together to create more impact. Thank you.
3 things that you have said. 1, need for collaboration. 2, go beyond when we're talking about capacity building, go beyond creating awareness. And 3, continued dialogue, creating platforms like this to continue the conversations. Who here is representing an MFI or a SACCO, by a show of hands? Okay, we're seeing several. So from what they are saying, even before we bring in Jackson as well as Rugamba into the conversation, do you agree with it? Or from your perspective, what do you think is the missing link? Do we have any person who's willing to take on that and respond to us? Today we're living here with solutions. So while we are at it, let's hear from you. What could be done?
Thanks. My name is Jeff Kanakuze. I work with Leshego. I like the presentation and challenges and opportunity as well as strategy too, but still missing the cost of funding issue, which is leading to the higher interest rates for microfinances. So I think also we need to think around what is the strategy for liquidity issue that we are having so that the cost of funding is lower to lead also to lower the interest rate. Thanks.
Thank you so much. Yes, I would say I do agree with the point raised by BDF CEO. For instance, I would want to just emphasize on the point related to creating synergies. Looking at the capacities of MFIs and SACCOs, when you talk area of about, let's say, product development, which involve capacity in terms of financial capacity. So synergies like co-creation of products will be one of the good ideas, and I know AMIR is working on that. The other point maybe will be on awareness. We are talking about financial literacy to our customers. This is an area where we can, work collaboratively together to, let's say, share the message or train the general public. Thank you.
Thank you. This is Upoma. I'm from BRAC Rwanda Microfinance Company Limited. I just wanted to expand a little bit maybe on the liquidity and interest rate issue. I think, Yaku, you said that we are providing everything, so what's more is needed. I think what we have here with the sort of liquidity as well as interest rate issue is a lot of the fundings are very sectoral. So if I am trying to do a long-term sustainable business in Rwanda, short-term sectoral funding is not going to be helpful. Like, if I get funding that is low interest rate for 2,000 farmers for 2 years, what's next? So financial institutions like microfinance, SACCOs need to know that there is a long-term funding available. There's wholesale funding at that interest rate that we can serve the entire country for long-term. Unless that is there, all of our efforts are going to be short-term and sectoral. It's not going to be long-term sustainable. The type of funding that we need for scale, and it's not a Rwanda-specific issue. There's other countries are also facing the same issues, particularly in Africa. There are countries who have figured out wholesale funding for for smallholder farmers, for women, particularly microfinance. I think there needs to be a sectoral effort to set up that wholesale funding facilities that's not just sectoral for one or two small groups, but actually helps the entire industry really scale. We haven't really broken the scale issue here in Rwanda or in Africa, particularly for poor women, the target group that we want to serve.
Okay. Thank you for that. Back to the panel. Ms. Tiachu, CEO of BDF, I think maybe I'll also bring in Rugamba into this, especially looking at the long-term funding model, something that has been highlighted, working with commercial banks, mobilizing finance for long-term projects.
Yes, thank you. I think a lot has already been said in terms of the different challenges, accessing finance, the synergies that need to be created. What I'll firstly touch on is what can be done. What can institutions like BRD do? BRD, being the only development financial institution in Rwanda, is at a, I would say, unique position where it can take on risk that perhaps other financial institutions can simply not do. So what we try to do as a bank in our new strategy, we're saying that BRD alone can't solve these problems. We are only, we have one physical presence in Kigali, but there is a nationwide need for this financing. So what we've done is that we're partnering with financial institutions, with institutions like AMIR, MFIs, SACCOs, to ensure that the impact that we want can reach as far, or rather where we can't go. So if you look at the portfolio of BRD, 60% of our loans with financial institutions. They are the ones who know the market, they're the ones who know the customers, and what we will then play as a role is sort of like a lender of the lenders. So we will mobilize the liquidity, we will mobilize long-term. I know people are talking about long-term affordable credit. That's what BRD exists to do, to use our position to mobilize that kind of financing. But we don't stop at just providing liquidity. That alone, I would say, is not the solution. There is also the need for technical support, for providing capacity building, training. I think it's already been mentioned, the issue around awareness. You can create all these products, but if no one knows about them, then there'll be a challenge there as well. There's also a need to leverage technology. A lot of the challenges that people are talking about, in cost of funds, everything, you find that there's a lot of perceived risk in the sector. And I used perceived deliberately because it's really just a perception. If you go into some of these sectors, agriculture, where people will tell you that, oh, agriculture is risky. But if you look at most of these banks, they're NPLs, you don't see agriculture businesses. So it's a perception. So one of the ways that you can deal with this is using technology. We're working with partners like the MasterCard Foundation to develop digital tools that can really help in quantifying risk, in increasing the risk appetite for financial institutions, because the two go hand in hand. There's providing liquidity, but then there's also the need to also de-risk some of these sectors and all of that. So I think what needs to be done, as has been mentioned, is that kind of collaboration. I think institutions like AMIR sit in a good position as the umbrella of all these institutions. But even for us, we have proof at BRD that working with MFIs and SACCOs helps us achieve the targets that we want. We have various products around housing and all of that we were struggling to really get to the market. But when we brought on the MFIs, the SACCOs, we saw the uptake really going high, because these are the institutions that have that so-called last mile delivery that we at BRD can't achieve alone. So that's some of the work that's been doing. I think when all these things work in parallel, then you'll see even the cost of funds going down, because the risk takes up a huge part of what we call the cost of these funds. Thank you.
Jackson, to bring into the conversation, AMIR is playing a crucial role, like even right now bringing us together, having this conversation. What is your take on what has been said? But I also want to get from you, looking at, I may say, misconceptions around microfinance as well as financing small businesses. Maybe do talk to us on that element. How can we change the narrative around this?
Thank you so much, Fiona. I think you got it right. We as AMIR, we are already celebrating, because what is being discussed here is what we wanted to hear. We wanted to hear from development partners, we wanted to hear from players, we wanted to hear initiatives, and as you can see, there is already deep discussion on what is pending and what needs to be done and what has been done. So, standing in the shoes of the sector association, much of my submission will be on advocacy, as you rightly asked. What can we do? What is our ask from the development partners here, but at the same time from our member financial institutions in the house? What can we do? I think following the submission from, whether from IACHU or CEO, BDF and Isaac, a lot has been done. But what is the challenge? I like the word, the phrase used by Vincent, CEO BDF, working in silos. So as you can hear, there is a lot, but everyone is doing and trying to go with the hanging fruits, but without emphasizing that we need to be mindful of sustainability and ownership going forward. So what we have seen that a lot has been done, even picking from the report of the expert. A lot has been done, but we as AMIR at the Sector Association, we still have a strong challenge, especially when it comes to cost of fund. I think one of our members highlighted in the audience the cost of fund. Why do we still talk about high interest rate when we have initiatives? We have initiatives with BDF, we have initiatives. IACHU alluded and said, we have done everything. What do you want from us? I will pose the question back. Why do we still have high interest rate? and high interest rate in twofold. High interest rate for the financial institutions looking for fund, for capital, which ultimately lead into high interest rate to the end users. Why do we still have that? And that is the reason AMIR, as the sector association, is convening such a stakeholder dialogue to dig deep and see what can we do together as development partners, as policymakers, as regulators. What can we do to reduce that? How can we move down from 24, from 22, from 20 to at least 15 or 13% or so? So as an umbrella, as an advocate for the sector, we are calling upon development partners and everyone on board to how can we solve this problem of cost of fund? Is it because of that the members or the sector or development partners or the institutions don't know what it takes? What can we do? Can we use the approach that we are using as AMIR and other development partners to do the same so that the information is shared to all development partners and all the beneficiaries? What can we do? So we as AMIR, what we are doing, we are trying to reach out to all development partners, whether gathered in this house or reaching their offices, knocking at the door. We have been to all the offices as we're here. We've been to FR, we've been to BRD, we've been to BDF, trying to advocate for the sector. What can we do? So apart from that, we try to come up with initiatives, projects, programs that we at least try to solve some of these problems. I think Isaac highlighted on that. We have programs with BRD that is looking at how can we ensure that we avail funding facility through Kata's program, so that at least we use that component, we identify at least 30 institutions in the sector. It's a drop in an ocean, but at least we have those institutions that have a facility fund and they are able to lend to their clients at a reduced interest rate. We are not scared of talking a single digit. So that's what we are trying to do as AMIR, reaching out. We have another program that we implement with Rwanda that is also targeting at reaching out to more than 40 institutions in the country. So get 40 institutions from plus 30 institutions, 70 institutions, a drop in an ocean. But at least the essence of this gathering, how can we add to what AFR is doing, BDF is doing, BED is doing, the MasterCard Foundation is doing, KEA International is doing. How can we come together and we try to solve those problems, the cost of fund, financial education and literacy that is still low. So how can we come together and solve those problems? So that is the role of AMIR, and that's what we are trying to do. Thank you.
Yachu, he's responded to your question with a question also saying there's a component interest rates. Maybe touch on that. We've had on the importance of collaboration. So then in response to that, what is the role of the different stakeholders? How can we come together? How can it be a shared problem and we work together to find a solution for it?
Yes, thank you very much. Well, though I don't want us to dwell on the cost of capital because there are so many issues, but I think on that cost of capital, I always look at how people access financial services and what are the key considerations. When I don't have access to any financial service, whatever cost you give me, because I need it, I need that financial service, I'll pay. Whether it makes a lot of sense or not, because I need that service. For instance, I need a house. You tell me you need to pay 20% for the mortgage. Because I need that house, because we are solving problems. we are actually providing solutions to some needs. People will pay, will accept. And I want to say that I think it's someone who said that, the mere fact that people are still paying, in this market, 9% per month as an interest rate. You know that. You know that. I don't want to mention any player here. Or pay, so that would be what? 108% per annum. Yet they know there's a bank, a commercial bank, that is charging 18% per annum. Why do they go to that player and not go to the commercial bank? I always ask myself. It's because probably the way this one who is extra costly is packaging their product is much more convenient, it's quick, it's, you know, their requirements are not too cumbersome like the commercial bank, and so on. So there's a market failure. So there's an issue there because people are paying actually high costs. They're paying because they need a service. Now, how does the microfinance sector, and I think we've talked about it, collectively, AMIR, as BRD, set up a microfinance liquidity fund, for instance, which is a conversation we are having. And that then crowd in different investors, including actually impact investors that can lower the cost of capital, and then blend it even with local commercial liquidity, and then see how we can lend at a lower rate. But the problem doesn't end there. Once you have, you know, appropriate interest rate, then there are other issues that you need to resolve. Because actually we have players in the market that have low cost of capital, but people are not going to them. So there are other issues that we need to solve, I think, which is very critical. And it's that convenience, it's all of that. So, allow me, Fiona, to go to something very critical. I think as a think and do tank, AFR, we really don't stop with FinScope survey. We always talk to different players and policymakers and say, these are the gaps that are remaining, and actually agree on a course of actions. And I would say that I think someone, it must be Isaac, who talked about leveraging technology. And in fact, those figures you saw, the key driver of financial inclusion for the last 4 years is actually mobile money. You saw the numbers. You saw MFIs dropping a bit. You saw SACCOs dropping a bit. Mobile money shooting. What does it tell you as players in the market? So there's disruption in the market. You know, and when I talk to the regulator, I will say, why don't you give actually to Momo and Airtel Money a banking license? They disrupt the market quickly. And I would fund them, withdraw the money from you. Yes, because that's where people are going. That's where people, you know, enjoy getting those services. So we need to disrupt ourselves as players in this sector and see how we can leverage technology and data. I want to add data. Why? Because there's a very interesting initiative we have with Ministry of ICT, Central Bank, and RISA, which is somehow, you know, probably linked to what BDF is doing, but on a larger scale. So whenever you bring a transformational program, you will see actually changes. You saw the pension numbers increasing because Asia came. And that was really a huge program, 4 years pushing it, and we saw those numbers going up. Now, so when I talk about data, it's very important to bring the concept of digital public infrastructure. So we have so many siloed kind of platforms. So the farmer, for instance, has data within the land registry, isn't it? We know it. The farmer has information at SNS, at BK House and RAB. The farmer has information at NID. The farmer has information at Rwanda Space Agency because with satellite data they can know actually what you are producing, you know, the moisture, you know, content, all of that. So now the issue is, and what we want to do actually as transformational is to say, how do we bring all this data together into one portal? And then let the players connect once and be able actually to have visibility on me as a a customer and then provide services. Now, the first movers into that space will actually destroy them, kind of distort the market and challenge it, which is great, and that's what we want to see. So as we invest into technology, start actually looking at that ecosystem, what is happening, and where do I plug as soon as possible? Because there's these we call the new players in the ecosystem, the neobanks. Neobanks don't have a branch, you'll never see them. They just go silently to the central bank, get a license. They start connecting with your client. And they start providing financial services. And the time you know, actually those numbers that are going down, they have reached critical numbers that sometimes you might not be even sustainable.
I think, Isaac, I'll just bring into the conversation on two elements. One, he touched on it, but I think Jackson will go deeper into it, looking at the adoption, the rate in which we're seeing emerging technologies being adopted. For you, if you can lightly touch on it, but just focus also on financial literacy. It's something that came up on during the presentation, during the research. And to what extent, what role is a BRD playing, and how are we seeing it shape the sector?
Yeah, thank you. And I think I'll build on what Iyachu was mentioning. So when you look at the disruption happening in the sector and all of that, the numbers really don't lie. As I was mentioning, currently I think there are about 7.4 million active mobile money users. When you look at the number of, say, bank accounts in the country, it doesn't exceed like 2 million, right? So there is something that's not being done in terms of the banks and the financial institutions that are not serving the needs of the market, right? So when he was mentioning, what is that data telling us, right? So he mentioned that people are accessing finance at 9% per month or at 22%, but it's really an issue about access, right? So if people feel that it's easier to go to a lender that's going to offer you these exorbitant rates, maybe because they're not asking you too much, then we need to ask ourselves, okay, in terms of what we are asking for, how can we support, right? Because I don't think there will be a time when banks say, okay, we'll not take any risk, we'll just give you money. But there is tools that you can do to support that. So through risk sharing and through all that. And if you look at some of the products that we are putting on the market, Jackson had mentioned Kataza, we're really looking at supporting those people who would have otherwise gone to these other more expensive financial products by offering them those de-risking products, by, as you mentioned, literacy. Access to Finance Rwanda is doing a lot of work on business development services, because there is no point if financial institutions come up with these products, but people do not know how to structure their businesses in a way to access these products. So in terms of the ecosystem, once as BRD, what we're doing in terms of leveraging technology, we want to make access very convenient for MFIs, for SACCOs. This liquidity that we sit with and mobilize, it should be a very seamless process of, sending us your pipeline, being quickly reviewed, dispersing the money, and so forth, because when that capital is not flowing, no one benefits, not even a BRD. So it's in our interest actually to push this money out as fast as possible. It's also important that all the players in the ecosystem, the smallholder farmers, the small businesses, are also supported, right? Because I think no institution here on its own can solve that. But once we have those, we've been mentioning the challenges around working in silos. We will have a guarantee scheme. BDF will also have guarantees. Everyone else will have guarantees, and we're not being as efficient as we should be. So as BRD, the role we can play, especially in the financial sector, is that convening role. We can bring together these stakeholders, we can channel the liquidity through them, and try promote that market efficiency through technology. Because if people feel that, yes, the funds are available, but it's a nightmare to access, then they'll continue going to people who are much more expensive. And even through those channels, they will not offer you the full package of support you need, because these financial institutions can offer you advisory services, they can offer you longer-term financing that these other institutions can't provide. So they need to really understand some of those trade-offs. So what we can do is to continue to work with the different stakeholders to understand the pain points and to develop products that really meet those needs. Because if we're missing out on those 7.4 million people that are accessing money through their phones, then this disruption will make banks maybe irrelevant in the future.
Jackson, around disruption, to what extent are we seeing MFIs, even SACCOs, ready adopting these emerging technologies? What innovations are we seeing? Also, the need for different products has also been raised. Talk to us on that as well.
Thank you so much, Fiona. Yeah, I think we all know that. I'm happy that our members, some SACCOs are in the house, MFIs are here, and indeed the regulators and the policymakers, Ministry of Finance and Economic Planning, we are with them here. So, and we all know what is happening when it comes to automation and digitalization of the financial sector, especially the microfinance sector. As you are aware, we know that now all the Umurenge SACCOs across the country, the 416, they all have core banking systems. That's the basic for us, but it is very important. But they are all automated. We also have another category called the non-Umurenge SACCO. You all know that. They are all automated. There was a project, the remaining part, and we implemented the project with the support from AFR, and automated all of them, so they have core banking systems. So the microfinance limited companies in the house, they all have core banking systems. So there's work that has been done. But why do we still have disruption in the market when it comes to technology? Why is MTN taking it over to 77%, as you have seen? So there is a question that we need to answer, as you rightly said. So the mandate of AMIR, what we want to work on rapidly is coming up with different digital financial services. Sometime back, we had a chat with Roslyn in the house from UNCDF regarding technology advancement in the sector. So we want to see how can we come up with different digital financial services, and then we do integrations using the system that is available. We have different initiatives that we are implementing regarding loan origination. Some of our members in the house, Duterimbere, Umutanguha, RIM, we have already implemented some of these different products to do with loan origination and scoring. We have products that we are implementing to do with climate resilience, to see how can we assess clients, especially in agriculture, to see the area where they want to invest in agriculture, in different value chains. How can we assess the area and then determine whether they will have sufficient yield as we plan? So we're also looking forward to how can we accelerate this to all the institutions. We have a digital component in the project that we are implementing with Care Rwanda, the SAF project. We have already automated one of our member, Vision Fund Rwanda, with MHANO. It's also a digital product. So what we are trying to do is, whereas we have core banking system, standard, is that enough when it comes to push and pull? Is that enough when it comes to receiving SMS about my account? Is that enough when it comes to applying for a loan? They assess a loan and then they give me feedback to ensure that every client of these institutions is served real-time and seamless, regardless of where they are. So we have women, we're talking about women, we all know multitasking when it comes to women. They are taking care of their children, they are in the farm, they are preparing food for them, but at the same time we want them to be financially included. What can we do? We want them to pick their phones, because not everyone will be having a smartphone. So we want to ensure that at least even those without smartphones, they have USSD code. They just tap and stay stuck, and then they do a transaction. So what we are doing in collaboration with all our partners, I think with also BRD, under Kataza program, we are going to automate most of these village saving and trading groups and SMEs through one of the fintech called MVend. So we are going to automate them in collaboration with BRD to ensure that they are automated, and then it helps us to link them to the financial institution for deposits, for borrowing and the rest. So what we are doing, Fiona, is whereas we have core banking system, we need to come up with different digital financial services, and then we do integrations. But as our colleagues have been discussing, digital financial services also come with a challenge. Again, it is a task beforehand. Cyber security, cyber attacks. So we have a role, we have a mandate, we have a task ahead of us to ensure that we strike a balance between having a core banking system, digital financial services, but at least protecting clients from cyber attacks during the transactions.
We're going to get floor interventions. Do we have question, contribution? Okay, start with this side. Tell us your name. If it's a question, who are you directing it to?
Thank you very much. I'm called Frank Namara. I'm from MaraDB. I have a challenge, actually. I don't know which person I should direct this. In MaraDB, I'm in the investment department. When you see the overall turn up for people who are registering companies, the number is high. But also when you go to another side, others are also closing. So the question is, why? Every day, at least we have like more than 100. But you also have some people also who are closing. And I did, one time I met some people, I was asking, you guys, why are you closing? They were saying, we don't have capital. They are running away from institutions. Actually, we still have some people who take microfinance or other bank financial institutions as a threat. No, I cannot put. They prefer actually to work with peer-to-peer to get money instead of going to microfinance. They say, those people have a lot of high interest rate. Because people still have, banks are bad. Banks, I cannot, they will take my stuff, they will take my land, they will take, so they still have that thinking. So my question is, who is to blame?
Okay, someone from the panel, Jackson, would you want to take that on?
Thank you so much, Frank. Yes, of course it's a concern, and I'm happy that the institutions themselves are in the house. Whereas I would try to clarify a bit, but I think they are also better positioned to answer why we have very many companies registering on a daily basis, and at the same time having very many closing doors. What we are trying to do is, we have already discussed about the cost of fund. Probably the reason they are closing is because, one, they fear reaching out to these financial institutions because of the high interest rate. That's one. Two, probably they have accessed fund and they have failed to operate because of the high cost of fund. You never know. So I think what we can pledge is that reaching out and conduct a market survey and assessment to determine now, in particular, companies, do they work with financial institutions in the area where they operate? And if they do, what are the challenges that they face? But of course, as Iyach said, we all know that the challenges faced by individual businesses or companies, of course, is the cost of fund. That's why we are trying to co-create. We are trying to, and indeed we are calling upon all the development partners in the house. We are trying to come up with a fund, a microfinance liquidity fund, at least where different development partners can come and invest. At least we can attract investors. It can be in terms of debt, it can be equity, it can be impact fund. And that is the only way we can try to solve some of those problems, where at least businesses can access funds that are cheap for them to operate. The other thing is to do with public awareness, conducting campaign. As I said, some of these institutions here, we have different products, different services, but probably that they don't know. So I think we need to be proactive and aggressive in terms of conducting awareness and marketing of what we do. You never know, you might find there are some services that they didn't know and then they tap on.
Yeah, maybe I can also compliment, and I think Vincent had mentioned it. So when you look at a lot of these businesses and their financing needs, their stage of development, sometimes actually, debt financing, as he mentioned, is not the best option, right? So when you look at, I think other markets call it early stage financing or seed capital and things like that, typically you don't get that from a bank or from MFIs, because once you come into this formal kind of like arrangement with a bank, you also, as a business, have certain obligations. So at early stages, he mentioned angel investors and all of that. Angel investors will give you capital. When they take equity in the stake, they also take interest in how the business is being run, the safeguards in place, because you need to grow. You need to grow to a point where even maybe you outgrow even MFIs. Maybe you're going either directly to the capital markets or directly to banks, directly. But a lot of these companies can benefit from a lot of that early stage financing, not just to give them capital, but to bring in players in equity that will strengthen your corporate governance, your whatever, to position you well to access financing at scale as you grow. So I think there needs to be, in the market, these players. I think, from a policy perspective, from, products, we need those equity, early stage, venture capital, call it what you may, but, I think that's how other well-developed markets have supported MSMEs.
Okay. To better use time, we're going to take contribution from maybe 4 contributions, and then we'll get the responses, and then if we still have time, we'll open for more.
Okay, thank you very much. I'm Abed Sherif from Inhunga Finance. Actually, I appreciate first for this workshop. I want to contribute to what you have mentioned as interest rate. The consultants say that it is somehow high. I was wondering, it is high compared to what interest rate? That's my question, because sometimes the consultants themselves, they compare interest rate in microfinance sector to the bank sector. But to my side, let me say the way we go through when we are in microfinance activities. You see, we start by actually looking for the clients from the inner village. You will not find any staff from banks, commercial banks, in there. But we find there that staff from microfinance, from SACCO. We go there once, twice, 3 times. Those costs are not actually numbered. We train them through group lending methodology. We are not paid, and no incentives which are given to those SACCOs or microfinance sectors. You see, then we start with those businesses which are in the early stage, as we have mentioned. I have actually saluted the idea of CEO Vincent. He mentioned that only 45 of business, they are at survival rate in 3 years. We deal with those businesses, you see. And then when microfinance interest rate annual, it is 22% or 21%. You say it is high compared to the commercial bank, which is 18%. You see, that really there are costs which are paid by microfinance sectors, which are not incurred by commercial banks. Again, we can see, let's say all of us who are here, if microfinance gives you a loan, you even withdraw the whole loan and you go to deposit in the commercial bank. You don't even keep it in microfinance. So for us, what is we are talking access to finance for all opportunities, challenges, and strategies. The challenges we have microfinances, you can see first of all, we don't have deposit from you, investors or other people should have money. Even if you are working for microfinance, you get loan and you withdraw to be deposited in the commercial bank. Banks, they do have money which are lie there. They just lend it for nothing. Let's give you an example. For us, even if we profit for deposit, we pay 10% for depositor. 10%, that is first. And then cost, all these operating costs. The non-performing rate in microfinance is higher than the bank because banks, they take those graduated investors. You can't find any business in the RSA that's supposed or funded by bank. So when consultants or other people saying that their interest in that sector it is high, you should also consider that things. Again, wait a bit. In microfinance sector, for example, we don't charge what we call those monthly charges in microfinance. They withdraw, they send money for nothing. It doesn't happen in the banks. Those are the services. They send money for free. So those are the costs which are incurred by microfinance sector.
I recommend the coordination on what Mr. from RDB said, coordination on awareness campaign and mobilization. And secondly, the sector needs a kind of code of conduct. Mr. Yachu said about some microfinance which charge 90% per month. I don't know if there is. It's not microfinance. Okay. It's not microfinance. Okay, thank you so much. But the coordination and the code of conduct is also something which can contribute. But for the consultant, you try to improve your work and your recommendation at the responsibility of other stakeholders. Lastly, I want to appreciate some initiatives like from BDF. BDF is contributing well on women product and youth on collateral. It is working well. Secondly, those funds from BRD and SIDAT and the other like affordable housing, those are the solution on reducing interest rate. Lastly, my question to my colleague from RDB. What is going on in RDB? Registration collateral is taking more than 2 weeks, 3 weeks. Your TAT is 24 hours. What is going on? Thank you so much.
Thank you very much. My name is Peter, and I'm the head of programs at AGRA Rwanda. So my intervention would be a bit sector specific, if you don't mind. So we've talked about de-risking, and majorly we've been looking at the financial services sector and financial instruments. I'd like us to also think critically about non-financial de-risking mechanisms. And especially this has to do with partnering with institutions that de-risk at the level of making sure that there are solutions and technologies that can help smallholder farmers or farmers generally achieve the productivity levels that can enable them pay back some of these facilities. If we take a very critical look at what's happening, climate change is a very big issue for the ag sector and several others. And these are not necessarily intervention solution problems that you solve with financial interventions. So it'll be nice to know how the financial institutions actually leverage non-financial risk mitigation strategies to ensure that access to finance is improved, especially for smallholder farmers and people within that sector. Thank you.
Last contribution.
Hello, everyone. My name is Paul Kato. I want to thank everyone who has contributed to this. My question is going to be targeting the youth. I like that the theme is access to finance for all. And we all know that Rwanda has a youth population of over 70%. And I also like that we spoke about how mobile money penetration is increasing. And really, this is generally driven by the youth that we are having today. My question is going to be to all the people on the panel today, right? The rate at which the youth are growing, they are using mobile money also shows the way they are going to access the finance on a rapid way, right? So if a young person in Gachenye district wants to buy seeds to grow or to farm whatever he's going to be doing, he needs this money now. He needs to move fast, right? The only challenge today is financial institutions take long to support these people in accessing this finance. You'll find on average, this person is going to spend 1 to 2 months to access a loan, yet he or she can just go on mobile money, get a loan, even if it is 500,000 on or 200,000 on more cash, immediately buys whatever he wants and goes on to business. Maybe he can get a few funds from the friends or the family to top up on the remaining. When I look at how the whole conversation of interest rates, collateral, this is a conversation, honestly speaking, has been happening for over the last many years that I can think of. What are you guys doing today to support the young people today to accelerate at that rate as well? We are using technology, but why is it that someone to access a loan, to get even a collateral registered in RDB takes 2 weeks? 2 weeks, someone who needs a mafaranga to go and get his seeds, this person is already moving forward. He's going to get one loan from A, from B, from C, and we're not going to progress. What are you doing from a bank level, from a financial level, to say that we are progressing fast to meet the ever-demanding and growing needs of the young people of Rwanda?
Thank you, Paul. Thank you for that question. So we're going to include the response in your closing remarks, but before we come to you.
When I look at how the whole conversation of interest rates, collateral, this is a conversation, honestly speaking, has been happening for over the last many years that I can think of. What are you guys doing today to support the young people today to accelerate at that rate as well? We are using technology, but why is it that someone to access a loan, to get even a collateral registered in RDB takes 2 weeks? 2 weeks, someone who needs a mafaranga to go and get his seeds, this person is already moving forward. He's going to get one loan from A, from B, from C, and we're not going to progress. What are you doing from a bank level, from a financial level, to say that we are progressing fast to meet the ever-demanding and growing needs of the young people of Rwanda?
Thank you, Paul. Thank you for that question. So we're going to include the response in your closing remarks, but before we come to you, okay, can see Frank, RDP has, he'll respond to the question direct. Hope you'll get close to him and then you'll get a response on that. Yeah, so I think I'll start with you, Isaac. Closing remarks, call to action, and also as responders, how can we walk and move at the pace of young people?
Thank you, and thanks once again to AMIR and everyone here today. I think the solutions and ideas that are coming out of this are very helpful. One thing that I can say is that as financial institutions, we need to go with the trend. We can't be left behind in terms of availing finance to people that need them. I think everyone has shown that perhaps we have not been doing it the right way. But I think with the adoption of some of the technology solutions we are looking to create, even as a development bank, we can develop these solutions, but it won't just be for us, it will be for the market. So it will increase the uptake of these services, because what we notice is that it's really about the process. It's not really about availability, about cost. It's about the process. So in streamlining that process by using technology, automating some processes that are typically manual and delay, as Paul was mentioning, in terms of generating credit scoring models and all these kind of things to really transform how we provide credit. So I think as the development bank, we can commit to continue supporting MFIs, SACCOs, the wider financial sector in developing these tools that can help us, channel this capital in a more efficient way.
Mr. Vincent?
Yeah, thank you very much. So I want to come up with my own recommendation. Apparently, this is one-side gathering. So I'd like to recommend that next time we can invite some borrowers to hear from them, the MSME sector, young people, women, representative, to hear from them. This is recommendation number one. Number two, related to that one, we need to hear from them and come up with financial products that are really responding to their needs in terms of how they run the business, how they generate the cash flow, to tailor even the payment schedule with the business model. And finally, we need to make sure that the ecosystem, the demand side borrowers, then the supply side financial institution in between BDF to facilitate and to make sure that the two ends can meet, the demand side can meet with the supply side. So there is a lot of coordination work that needs to be done, and there is a need for creating a lot of synergies within the ecosystem to make sure that...
Yeah, thank you so much. I'll also be brief. First and foremost, I want to thank everyone that attended to our invitation. This is exactly what we wanted to see. So my recommendation is one, I want to remind you of some key figures. Microfinance sector has now nearly 457 institutions licensed by the central bank. And they are scattered all over the country, including the Umurenje SACCO on every administrative sector. That said, we are talking about 6.5 million clients of MFIs, microfinance sector. What does that say? It requires us to think about the population that is being served by the microfinance sector vis-a-vis the total population. I'm talking about adult population in the country. And that is a call for everyone to see where we need to target our interventions. Second, I think there is a concept that we need to be familiar with, what we call the market system approach and localization. Of course, we have different development partners with beautiful and good initiatives, but when you look at the portfolio they have, it becomes hard, and I think Isaac alluded to that. It becomes hard to move down to the sector, to the district, and when in the actual sense, on the other side, there is an organization that can do that better. So I think we need to be coordinated and see who can do what. That will help. Therefore, when it comes to financial inclusion, access, financial education and literacy, awareness, AMIR is better positioned. I'm not advocating for AMIR, but that is it, because we organized this event, and that is, AMIR is there. Rwanda Bankers Association is on the other side. We have a SAR. So we need to know who can help us reach out to the end users or the beneficiaries. The other thing that I wanted to mention is ownership and sustainability approach. We have very good projects, very good initiatives, but a project has a start and an end. And who will carry this forward? So we need to engage concerned organizations in the implementation of the projects and the initiatives so that when the project is no more, that organization or the beneficiary is there to carry forward the products and the initiatives. So I call upon everyone around trying to striking a balance between demand and supply, and then we come to a point of equilibrium. That is protecting clients, but at the same time protecting the financial institutions. We had Ingunga, and we actually understand what they are. So our role is not to reduce the interest rate, but our role is to ensure that we have low cost of fund, and then you also do a business. You reach out to your clients, you do a business so that you don't incur a loss. So we are here to work with different development partners to ensure that we reduce the burden for the institutions, but the burden also for the clients going forward. Thank you, Fiona.
Thank you. Thank you all for your closing remarks. As it stands, discussion, having more dialogue, it's crucial, and we all have a role to play. Whether it's the policymakers, whether it's the private sector, but also MFIs, we all have a role to play in order to drive this forward and bridge the gaps. Thank you to our amazing panelists. I invite the photographers. We're going to take a group photo before you exit the stage. Let's give them a round of applause. This was a very insightful conversation, yes? If we can have the photographers, please. We're going to have a group picture and then we'll move to the next segment. AMIR has had you, and AMIR has documented some of the work, and we're going to be telling us more about a book that they've published, the second edition of it. The floor is yours.
Yeah, thank you so much, Fiona. I know, looking at the time, we have to be mindful of that. I want to thank everyone in-house for respecting to our invitation. And what we are going to do is the appreciation of the work that the development partners are doing, our member institutions are doing. So we came up with an initiative of documenting the work that we are doing. I think Fiona rightly said that na fotona chabai. Without writing, without documenting, you can't know what the development partner is doing on the ground. With that, we came up with a product of documenting the work that is being done or that has been done by different development partners, and we put it in one book that is called the annual AMIR book. So with that, we are going to launch AMIR book edition 2, that is 2024. So Fiona, without further ado, I don't want to go beyond that because we have people in the house that sponsored and subscribed for the publishing of that book. So I think you have the list. Yes. I just wanted to highlight that this is the work that is going on every year. The work that you are doing, we are going to be reaching out to you, and then you subscribe or you document the work that you are doing in that book. It's going to be distributed to all our development partners so that they can do what everyone is doing to avoid working in silos. Over to you, Fiona.
Thank you for that brief description on what the publication is about. I invite you, if you can stand here, I'd also like to call the chair for AMIR to also come and join us here. We're going to be giving the publications. As he said, for now we're going to give a few copies, but more will be shared with the rest of us. If we could have the chair to also come join you. You're welcome. So now I'm going to be calling the different partners who are going to be given this publication. We're going to start with BDF. If we could have the representative kindly come. We have a gift for you. You're going to be receiving the hard copy publication as well as a gift from AMIR. If we can have the gift to be presented to BDF. And now you can stand for a picture. You can stand for a picture before you leave. Yes. Amazing, amazing. I would also like to invite Access to Finance Rwanda. We also have a gift for you. Thank you, Access to Finance Rwanda. Thank you, Alliance for a Green Revolution in Africa. If we have the representative. You're welcome, you're welcome. If we can also have CARE International Rwanda. If we can have Unguka Bank, a representative, Unguka Bank. BRAC Rwanda Microfinance Company, PLC. If we can also have a representative come forward. BRAC Rwanda Microfinance Company. Okay, if we can have Kodai Rwanda also, if we can have the representative kindly come forward as well. Could also have a representative, the Central Bank of Rwanda. You're welcome, you're welcome. We have a gift for you to say thank you for your continued partnership. Duterimbere IMF PLC. If we have the representative, kindly also get close. Duterimbere IMF PLC. Next, we have Muganga SACCO. If you have a representative, get ready. We'll be coming to you next. Amazing, amazing. Muganga SACCO, you're welcome. If we could also have a representative from Vision Fund Rwanda. Okay. If Vision Fund Rwanda, you're welcome. Also do come forward, we have a gift for you. Okay, I want to now invite, if we've given you a gift, kindly come. Let's take a group picture. We have more gifts that we'll continue giving. Please, Mose with the kadot kwabahaye, get closer. Let's take a group picture. Let's take a group picture. Twish. Everyone who's received, please. You're welcome. Group photo, if we can have, if we can also have Ministry of Finance and Economic Planning, the representative, also join us in the group picture. If we can have someone from Development and Social Impact Knowledge, also come join us for the group picture. Someone from Minagri, also please do join us, as well as Rwanda Cooperative Agency. Please do join us for a group picture. Thank you so much. The photographers are happy. Thank you so much. We're going to get a reveal into what the publication is, and we'll share as well as the publication with everyone. So we have a gift. If you could kindly hand it over to them, and do the And reveal for us what is inside. They're going to reveal to us what the publication looks like, what to expect, as they continue to document the journey, document what is currently being done. And if we could have a picture of that, if we could have a round of applause for the work that AMIR is doing. We're now going to go ahead and get the closing remarks. I think I'll once again invite the representative from the Central Bank of Rwanda, Imirwa Clarisse, Director of Microfinance Institution Supervision at the National Bank of Rwanda. And as she makes forward to deliver her remarks, reminder, we can all scan the QR code and we'll be able to get access to the publication.
Thank you so much, Fiona. Distinguished colleagues, development partners, and different stakeholders here present, good afternoon. Mwiriwe. As we conclude our today's productive discussions, I want to express my sincere gratitude, first of all, to AMIR for organizing this very important dialogue, and to each one of you for your time, contributions, and unwavering commitment to advancing the microfinance sector and the financial inclusion. Our conversations have been rich with ideas, solutions, and strategies that will certainly shape the future of the microfinance sector and, by extension, led the lives of millions of Rwandans who depend on it. In terms of access to finance, we recognize that while we have made great achievement, as it was presented this morning, we have 96% both formal and informal financial inclusion, but many barriers still remain. Working together is a success. Thank you once again for your active participation and valuable insights. I look forward to the next steps in our shared journey towards building a more inclusive, sustainable, and equitable future. Thank you so much.